Anyone can be financially set for retirement if they own just 3 homes. Hey everyone, I'm Xochitl Cervantes with Rockstone Real Estate Group here in Austin, Texas. And in this video, you're going to discover how you can take your first steps to becoming financially free through home ownership. Becoming wealthy is a goal that many people strive to achieve and achieve a stable source of income well into retirement. But for many people, this just seems so elusive and out of reach. However, I'm going to show you an example of how you can purchase your first home and then 2 more properties to generate enough income for you to retire on without worrying about where your income is going to be coming from. And first, really quick, my name is Xochitl Cervantes with Rockstone Real Estate Group here in Austin, Texas. And if you're looking to make a move, well, just call me, email me, text me, and let's chat. All right, so owning your own home has some amazing benefits as well as including building equity over time as you both pay down your mortgage and the home gains value or appreciates over time. You also get the stability of a fixed mortgage payment instead of worrying about when your landlord is going to raise rents. You also get to write off your mortgage interest and your property taxes on your income tax returns, saving you thousands of dollars in taxes each year. Owning rental properties has additional benefits such as being able to depreciate the property over time. Now, this depreciation is really a paper loss that the government allows you to claim against your income and can save you also thousands of dollars in taxes each year. Now, the tenant will actually be paying off your mortgage for you and you have cash flow providing you with income. There are, of course, risks and stress associated with owning multiple properties, but it's a sure way to make yourself financially free. There are a number of ways to leverage the equity in your home to make buying investment properties a lot easier, such as a home equity line of credit. Now, let's take a look at an example of how owning 3 properties can generate enough income for someone to retire on, assuming an interest rate of 5%. The interest rates may be higher today, but we'll just assume this is a long-term average. And this is just one way to accomplish buying 3 homes. There are, of course, many loan products out there that allow you to buy a home for much less money, which I cover in other videos. Now, for the purposes of this example, we'll assume that the primary residence is worth $500,000 and each rental property is worth $300,000. We'll also assume that each rental property generates about $1,500 in monthly rent. I realize these numbers may be a little low, but so is the corresponding rental income. So with higher priced homes, the rental income will also be higher as well. All right, so if the primary residence has a 30-year mortgage with a 5% interest rate and about $400,000 loan balance, the monthly mortgage payment with taxes and insurance will be around $2,147. Over time, as the mortgage is paid down and the property appreciates, the equity in the home will increase. If the property appreciates at a rate of 3% per year, it will be worth approximately $1.2 million in 30 years. Now, let's take a look at the rental properties. This is assuming you purchase 2 rental properties over several years. If the rental properties have a 30-year mortgage with a 5% interest rate and a $200,000 loan balance, the monthly mortgage payment, including taxes and insurance, will be around $1,324. If the property generates about $1,500 in monthly rent, the monthly cash flow in the first year will be $176. And if the rental properties generate a combined monthly cash flow of $352, and that will be around $42.24 per year based on today's market. Now, of course, you do need to set aside funds for home improvements as well. Over time, as the mortgage is paid down and the property appreciates, the equity in the home will increase. If the property appreciates at a very conservative rate of 3% per year, it will be worth approximately $728,000 in 30 years, or a combined for the two, about $1.5 million. The combined value of all 3 properties will be around $2.65 million. Now, the cash flow from rental income will rise each year as well as you increase rents and your mortgage stays consistent. If you raise rents just about 3% per year, that monthly income per property will rise to $36.40 per month, or combined about $72.80 per month, and you'll no longer have a mortgage because your tenants already paid it off for you. So when you retire, you will have 3 properties you own outright that are worth $2.65 million and generate very conservatively 70 to 80 a month in income. You could easily sell off the properties and have a couple of $1 million in your bank account or keep collecting rent checks. So as you can see, with just 3 homes, you can retire financially free with millions of dollars in assets. If you're ready to buy your first home or continue building your real estate portfolio and invest in rental properties, hit me up via phone, text, or email, and let's create a personal plan for you to buy real estate. Let me know what you think about this video in the comments, and hope to see you next week, and hope you can share.